Now, I'm not saying that don't mind it to be seen as digitally. It has said buy and goodbye. It's not just doing younger. By the time it crosses this dotted line 40, 44, 60 thereabout. Good. Unlike if you do it before, I don't close. On our entry, wasted my money. In fact, that's my profile.
Yes.
Before this strategy, I dashed market $1,000.
Wow.
Because of enter close thing.
Yeah.
So, but since this miraculous software, you wonderful. Wonderful. God bless you and keep you and family, inshallah.
Amen.
Hello, sir.
Yes, Mr. Nat.
I always say that you are wonderfully made.
Amen.
And God will keep you for our generation, sir.
Amen.
I really wonder, when did you see my dashboard? How did you know that is my dashboard?
The spirit is one.
Wow. In fact, when I saw it, I say, hey, this man is walking in spirit. It's like, that is what the Bible said, that the sheepflock knows the sheep and the sheep knows the voice of the owner.
Absolutely.
In fact. Thank you, sir. Because I can't remember sharing my screen
with me,
and you manifested it. That was my screen.
If this, I mentioned it to you, is it yesterday or the day yesterday, was that
yes,
this buy and sell, this thing you are giving us, if we have the tool, this kind of tool for a very long time.
Yes.
All this, because before now, even I've lost an account. Even the one I was managing, I used this thing. At the end yesterday, I still lost it because drawdown was backlogged for a very long time. So at the end of it all, but with this, if this kind of tool we get now, for me to, even for someone to lose account just 2 times,
the person is sick.
For now, to still get confidence, say I want to enter market. You know that I know when someone is having the right thing, when you don't look the brother, you say this one is going back, and you will be sure that from where I enter, there is hope. Unlike before, it was just like say someone is doing it blindly. Yeah, it was blindly, not like blindly. It was blindly now. It's like you didn't learn how to drive. You carry motor express. That's what comes to say.
Mr. Paul, we always know that we are doing it blindly.
Wow, amazing. This is good. Okay, now, so we're going to look at the market, and then we're going to have a brief time with us, and we'll get it documented as usual and post it to us, because what plays out in market is more of, I always say there are 3 things in this system. There is market, and there is money, and there is man. So there is market, there is money, there is man. To man now referring to the total creation. So everyone say man. So as far as you are created, we can mute ourselves. So can mute ourselves so that the recording will not be altered. So there is a man, So there is money and there is market. All right, so I'm going to share the page to us. There is money, there is man, there is market. So they are very important. So if these things are very important, so there is man, there is money, there is market. So this is the main thing that man is struggling for in the market. And I like us to still know that the market as well is struggling for this thing with man. So there is money, there is man, and there is market. So man is struggling with this in the market. Market is struggling with this in man. And now that's where the psychology plays in. I'm sure many of you saw talking about burnout in us. I posted this morning. First thing we said, limit screen time. What I mean by limit screen time, what is making you glue at the screen all the time is money, or you're actually doing the wrong thing. What to need, even for instance, let me go to life itself. There is a way you show desperation to someone, maybe you're looking for a contract. When the fellow who wants to give the contracts are aware the rate at which you are desperate, he can drivel you anyhow. So there's a way a man must set a control to be able to, so that the money will be a byproduct. And that thing is called process. And you hear me say most time that any process that cannot be repeated will not win. And I will tell us that it's not about making money. You must learn how to let money come to you in trading. So man is always struggling with money. Man's supposed to struggle with process, to understand a process. And that's why you see me, I teach a lot, because I still know and I am aware that people don't look for process. Yeah, it is true that we have a need of money and all the time. But there's a saying that if you do not know where liquidity is in the market, just know that yourself is the liquidity. So if you are the liquidity of the market, it means as well as you are struggling to get the money too is struggling to get you. And so market to get you, what is looking for your hand is your money. And so anytime we talk about liquidity in the market, it's about money in the hands of different people inside the market. So there are people who are the chief commander of the market. So they are looking for the money in the hands of people who have uninformed decision, who have no procedure, who have no system, who have no process to collect the money in their hands. And that's why we said, you must first understand that you are first a risk manager before being a trader. So you are careful, not that you are not aware that you can lose the money, but you are always create means of your tactical defense over the troop of money in your hands. So if you don't work with that, you discover that you keep giving money to the market because there are people in charge of the market who knew that you are weak in your mind. You sell out easily. And so they control your emotion. They struggle on you. So that's why I say limit the time. Say set trading time. I've been telling us this. Set trading hours. Stick to them. Post your trade. Rest. So on a schedule, you have to do this and you must work to practice it. Second, we say trade with a plan. So this is the chief of it. The secret of it is say, trade your plan and plan your trade. Just like now, many of you say, when you enter the market struggling and all of that, you run out. It's because there's no plan. And that's why you can't stick to a process. But when you look at it, okay, this is where I'm entering from. Not when a candle is moving. In fact, I normally say in very long time, I said, the best time to enter into the market is when it's quiet. The moment it's making noise, there were people who cook that. There were people who put stick, fueling that noise. And that's what you jump into. That noise you jump into is a bait that they use in catching fishes in the river. So they react to when they see that bait that is inside the mouth of that the fishing net and all of that. Then you jump into it. And I've always told us that waiting is part of trading. In fact, waiting is trading. It doesn't matter how you miss trade. But when you keep getting trade and keep losing the money, you burn out. You keep burning out. If a money, and you've had me oftentimes when I told us, and it's good that it's happening to many of us practically, that I said, if I give you $500 and in a year you trade with it, and after one good year, you come back with that same $500, I know that by next year, you're going to do well. If I check your trade, trade history, there was no new fresh money deposited into that market. And it was that $500 you deposited before that is still in. And you are battle, you make loss, you make profit, you make loss. But at the end of the year, you come back and show me that, see, I battle, but I break even. See the $500 I deposited. I will hold your hand that you are a hero. Because I know that certainly you are going to be reacting to the market. Because as a man, because market is struggling with the money in your hand, you too, you are struggling the money that is in the market. So you just go without having what to limit you on when to act and when not to act. So you must trade with plan. Say, know your entry, exit, stop loss, and risk before each trade. I've always been saying this. Your position sizing is very important. If you don't do that, forget it. I still repeated it yesterday. I said, everybody go and buy a notebook. Write out. So if you can't even give account of how many trades you enter before you lost an account, then you have done the wrong thing because there was no plan. So trading and planning, they have, pari passu. They are child of the same parent, right? They are cordial friends. They're not even child of the same parent. It's not about that. It's about people with mutual interest. People of mutual interest are strongly bond together than parent of the children of the same parent. These are not yardstick. So, because interest is what sustains relationship more, not they will say blood. Yeah, blood is thicker than water, but you can say once interest is involved, nobody understand limit or boundary or who you are, where you come from. Nobody cares. As long as our interests on the same pot, we'll find all means to get there. So you must, in fact, I always tell people, listen and hear this today. If you enter a market and you don't know where you are exiting from, you are good as not entering a market. There's nothing called that open air and all of that, because the market has been targeting you and you fall prey by opening a trade and feel that maybe because this person, because we listen to a lot of charts and online on YouTube, some will tell you they don't use stop loss. The question you need to ask them is that at what point do they start doing that? When they have so many sources of income, when they have so much account. Somebody who's trading with $1 million and his personal money, if he tells you he's not using stop loss and not even on gold, He's using it on currencies and all of that. And if you adopt that, I'm sorry. So it is important we learn how to plan our trade and trade our plan. If not, no plan is equals to stress and losses. Then we say, stay away from the platform. Now, there's something you need to understand, that chat don't run away. Set alert. Close your platform, breathe, and recharge. Your constant staying on chat will result in unplanned trades, which leads to a big regret. Of course, regret is, they don't say sorry in Forex or trading generally. No, you don't say sorry. The reward of your mistake is money. You pay for every mistake you make in trading, you pay for it. Your sorry in trading is dollar. So no need to say sorry. You already paid for it. As you lose a pound, you made a mistake, you lose dollar. So it's not, it's a pilot school. So that means you have to work on instructions, strictly on instruction. It's not noise. It's not hope. No, it's not hope. It's an emotionless decision. So you make a mistake, the pain in there is a result in loss. So you pay with dollar, you pay with money. So no struggle to, oh, I made a mistake. Yeah, you are paid with dollar. And that's why you see me, I'll tell you that. Why do I put stop loss and still work for the stop loss after I've paid for it? Because that money you kept there as a bait is a payment. It's a down payment. And you said, okay, whatever happens, I already agreed to pay you this. Watch over my trade. But the same you are struggling with that trade. Come on. Now, this is more reason why, because when we don't check plans, you see, sometimes I will send us a chart. And those charts play out, but we don't know when they do because we are just burnt out. You will see, I would send a chart. Look at how the market did yesterday. I told us this buy, we saw where it peaked from, but you know how many days it took before it get to that, the entry point of saying this market will get to this particular price. And if you get to that price, all right, we're talking about this point. So it was, if you go on 4 hours or something or daily, and I told us again that there are a lot of persons that have not been trading gold all this while because they don't know how to go about it. It's not a pride. We saw, when was this place created on the same gold we are trading? When was this place created? This other block was created, if you check it, that was October, around 18, 19, 20 or something to 21. So this other block was created. And the market was down and was struggling for a while until it meet other blocks and all of that, mitigated it. It took how many? That ended October, something at 18, 19, 20, 21. It was drafting and travel away from it. Travel far away from it. And as at November beginning, 4th, 5th, and all of that, he created another place again, which I always tell you that no matter what you are doing in the market and you do not understand point of interest, that's area of interest, you are wasting your time. Why would my eyes gaze as this guy, as a danger zone and as an opportunity environment? Others don't have record of what could happen next to this place. And then while he was traveling to this point, he created another den and say, well, I've not met up with this. He created it and travel off. Now, imagine he travel off approaching that old place that many do not pay attention to again. This time around, at around 12 of the new month, that's something since last month, 18, 19, 20, 21. He came back, revisited it. Now, the hope of many persons, which you don't do in trade, you don't hope. You work with fact, figures. That's like Indians work. So if you do, some of you love mathematics, it's fact and figures they deal with. Don't tell me story. Don't tell me story. Tell me facts. Fact. Prove to me. It's empirical. And then you say, okay, we are expecting here. So behavioral speaking now, anything can happen when you get there. That's where you're now waiting for confirmation. And finally, we enter into that cloud. If it will be clear. But it was still dark. How? The way the market reacts when you get there. This was giving you at around 13, 14. We get inside. Well, the result was massive. And then we left that place. That's a narrative, an event. Travel back massively. I would tell you, honestly speaking, a lot will lose account here. Because why? They are carried away by the narrative, what people are saying on the internet, on social media, in groups. That's why sometimes the more groups you belong to different ideologies and all of that, the more complicated your trading experience and life become. Because another person is telling you, I think we are going to go up. I think we are going to go down. Okay, that's not what we do here. I think. You don't think. You want to see at this time, this is what, so you are working with probability. It's a mathematical theory. And then you pick the higher probability. And I always tell us that trade is about two sides of the coin. Sometimes some persons will tell you that, okay, imagine when the market was here. I'm sure you can see my cursor. When it was here, that's October. Everyone expected, and what was my prediction for gold, that I supposed to go to 4,500. And it moved vehemently. And that stick to people's mind. And they are not dynamic enough to know that market can change. Because it's about human behavior that's captured in data. And then the market turn around. And then so imagine somebody who says, don't worry, just keep buying, just keep buying, just keep buying. How will you know when the market is going to turn around? And then the market turn around. And then people now say, finally it has crashed. And then the market will say, okay, I've not. Even though I may crash anytime, but I've not. And then the market move up here. After this, look at the massive move. And finally, it got back to where you was. Imagine you do not understand, or some of us got the data, but because we are still born out with so many hope and expectation, which I've told you, man, money, market. Man, money, market. Market, money, man. So the center of it is money. The market is looking for money from man. Man is looking for money from the market. So whose money is missing? Do you give market money? No. So that means what you are doing with the market is that you're a wicked person. You are fighting the market and collect what is not your own. The market will say, I will wicked you too. I will collect what is not my own from you. So you have to understand this reality. So what you are doing in the market, you are fighting for money. And until you understand the tricks and know how to dribble very well, then that's when you can tell the market, hey, you know what? I am the man here. And it's man that make place. And that's why you had in trading, we talk about market makers. And it gone to market maker models. It's the MMM again. Man, money, market, money, man, money, market, money, and market maker model. So if that is the case, I don't need to play to the gallery. So I need to discuss with myself as a man. And that is why you see that you can imagine the king in the palace struggling with the subject. So if the king does not know how to control himself as a king, children on the street will dribble him. They will follow him because he left his palace. So you have to be in charge as a king. You have to build the confidence and understanding, not pride, because at the end of the day, if you just have pride without knowledge, it's a big problem. So there's a check you must have. And then, so the market came here. And then you could see when the market came here, there's something that was happening. And I've told us that when you come to the market as a man, using our village market, my mother was a village market woman. Yeah. So I go to the market while in the village. Of course, those market that they bring farm produce. Now, every buyers that are coming, they go towards where they pack plenty of yams. Now, play will pack it in heaps. Cassava, heaps. So they go there and do what? And look at where people have more good ones. And when they get there, there's a factor that happens there. Where the volumes are much, people are able to get at lower prices because there are many sellers. And then when they buy, if they don't waste time, their vehicle are loaded and they move on. And that's the same ideology. Because when we say area of interest, that's a place where there are liquidity. When there are liquidity, that's where money are stocked. How is this money stocked there? Limit order, stop losses, all manner are there. And then the market revisit that place. Having collected all of those things, what do you expect it to do? He move, and it will be very fast. And that's why most of us will say, why is this market so fast like this? Market so fast like this because he has gotten what he's looking for. Then what will he be waiting for again? So these are facts about our behavior. So one thing, if you look at one thing in trading, you will see that trading reveals your real self. Then you will now say, I need to work on myself. When you're able to work on yourself with trading sometime, there's a level of discipline you will have. There's a decorum you will have. There's a way you look at things. There's a way you look at life now. It's different from other people. You are less noisy, because you have been drilled like in the military. So that drilling humbles you, and you are more tactical than just anyhow before. You are not reactive. You respond. So because you have dealt with certain things. Now say track emotion and put them under check. So keep journal of trades and feelings. Tired or frustrated. Pause. Spot patterns before they hit your account. So you must understand the dimension of the market. And so that you are not reactive. Most of us, what we do is emotion. Handle is moving, you jump at it. I can tell you, if many of you yesterday, the market you sold down, some people were buying. And in that buying, they don't put stop loss. And when market is going to move with speed, if that time is the way you want to now put your stop loss, I'm sorry. And yet, when you didn't even put stop loss, you were still, again, buy more. When the market is changing direction, you will buy more because you lost control. So it means if you cannot control yourself, you can't do anything in the market. You can't make decisions in the market. And that's what it interprets to. When you are always reacting to the market, so then you are not controlling yourself. It's the market that is controlling you. And what makes market to control you is that you are desperate of money. And check it most time. When you are desperately looking for money is when you lose more money. You know why? Because at that time, you are just giving anything. You see, when a man is looking for something, he's desperate. And you hear him say, my brother, I'm so broke, I'm in trouble, I can do anything. The person say, you mean you can do anything? He said, well, I have a solution for you. It's just that conditions with it. He said, bring it, bros. Do you know what? Do you know what I'm talking about? I'm a dead man already. So if I die, it doesn't matter. He said all of these things because he's not in control of himself at that point. What is in control of you is your money, is the money you are looking for. And I always tell people, no matter what is happening, forget it. Say, I will do, even heaven will fall. It's not true. Heaven will not fall. It has never fallen before. It's not London bridges. So once you are at that desperacy, you can do anything. And then in that trying to do anything, you'll be losing money. I'm glad, like this morning when I was asking us, you already find an entry, and that was a perfect entry. And there are magic to a lot of things because you have the right tool in your hands, but there are still fundamental around it. Like some of the videos I did yesterday, if you watch it, you will see when I said, no matter what to know, no matter what tools you have in the market, you must still go back to the fundamental of the structure of the market, because all the tools you have just help you to spot things you don't know in a naked eye before. If not, there's nothing as good as a chart is totally naked and you can see it plain. And that's why you see the analysis I did yesterday of the entry for selling and then the buying was purely on a naked chart. But when you now have that understanding, as that one is giving to you what you want, you are now making more, right? Pushing more and getting more, to make as much as possible. So the control of yourself is the first fundamental principle in the market. If you cannot build understanding around your control, then I'm sorry, the market will now be the one to control you. So I'm sure this morning now, many of you must have made money. It's very possible. Do I have witness? You can unmute yourself. How many of you have made money? Because I think you told me you waited, the market has grown, and then it was reversing. How many of you have made money already this morning? You have made, yes. And was this too stressful?
No.
It was not. But not like before.
No, sir. I have.
You have, right?
Yes, sir.
Was it so stressful?
No, sir. When I wake up, like, coming down, I started not to jump in until it provided an opportunity to buy.
Until it provided an opportunity to buy. Good. And then as you bought and you do, you see that you are more relieved. Am I correct?
Yes, of course.
You are more relieved. Okay, so let's move on. You can mute yourself, everybody. Now, if that is the case, I must, as a matter of fact, put my emotion under check, control myself. And the next is that I need to rest. So rest is part of the strategy. Feeling burned. Stop, recharge, return with clarity. Now listen, longevity beats short-term hype. Longevity beats short-term hype. Longevity beats short-term hype. What is short-term hype? You can make some money. Ah, wow. You say today I make $1,800. I'm not moved. Wow. Yesterday, at the end of the day, I was able to close my trade and I make $800. I'm not moved. Yesterday, wow, I was able to close my trade at $2,700. I'm not moved. I've seen more than that before. I've seen a lot of people like that before. The people now, they are not even know where to be found, even in trading. Now, if I digress a little, is that I was telling us that there are some things I learned from those what's it called? Sonic AI that is trading on this thing. Yesterday they make one loss. I was looking at it, but even the loss they make does not make any unnecessary negative impact on their account. Why? There's a control measure they have set. It looked like a limit that they are not getting enough money, but the consistency at which, the pace at which they move is something else. Remember, we said trading is marathon. Is whoever conserves his energy that we're able to finish well. But some of us, we don't control our energy. We dissipate it everywhere we find ourselves. We just dissipate it. We just carry the energy. Zoom, zoom, zoom. We carry the energy. Zoom, zoom, zoom. We carry the energy. Zoom, zoom, zoom. No, it's not like that. Because at the end of the day, that energy you wasted is going to be needed somewhere. And the day is going to be needed. you have wasted it. I'm telling you, you have wasted it. He said, when you fail in the day of adversity, your strength is too small. So he didn't say because the adversity was too much. He said because your strength was too small. So that means the fuel you have is not enough to combat with that, with that fight. So as such, you lost the battle, even though you are a gallant soldier, because there was you have dissipated all the bullets you brought, you have wasted it on irrelevant animals, just like a hunter. My grandfather, who nurtured me, was both a farmer and a hunter, right? So they call something a sheep out there in our place. That's the head of, there's not the head of the, but the Ashipa is the kind of the grand master of hunting. So it doesn't miss target. So anytime they are going for all those group hunting, in the hunters, they respect them because wherever they target to shoot, right? It's where people always honor them, to follow them and all of that. So they are grandmaster. And then they face one thing. And then, so imagine you have dissipated your bullet at I want to go and kill elephant. Cricket, pass, I shoot at it. Guinea fowl, pass, I shoot at it. Yeah, I may be collecting them and all of that. So then the grand day of the what we come for, now we are face to face with it. And this requires like 20 bullets to bring this mountain down. But I've wasted all of the fire. You see that the fire I killed, the way the bullet even pieces, because there's some, maybe because I'm from that background, I come from a farming background and a hunting background. Don't mind me. And as a Paiwan tapper. So my grandfather was a grand finale of everything. So there are things I learned from some of those things. Yeah. So you see, and it's the same man that he sang a song for that time, and all of us were learning. He sing in our lab, in our dialect. And maybe that's where I learned business diversification from. So, and he gave us this. So this is going to help you. So when you are watching this thing again, because I'm recording it, okay. And he said, the song says, the meaning is, the direct interpretation of this is that if you do small hunting, you do small farming. That the day you do not kill guinea fowl, you will kill yam. And do you know why he drafted that? He told us that, when our fathers, so the children, he was a hunter, and if you come to, he has farm, but he does not stay in his farm. So if he pack his children to the farm, normally what he does, when he get to the farm, he will move around the vicinity and maybe kill some animals, and then maybe look for one or two things from how they eat meat, like they butcher and cut it like yam in the pot, and he kept. So on this fateful day, he entered the bush to go and farm, to go and hunt. And in that process of hunting, he, sometimes because of your target, so he was targeting a particular animals. And in that process, that animal took him far off. And so the children that ought to have eaten since morning, they were still in the hut, and he was away. And this hunting took him long, coming back towards evening. So children were in the farm. Some have lied down. They have cried, tired. No, children is food now. It doesn't concern them. Nothing concerned them. He said when he came back, he met them. The one that could still stand was standing, and the one that had slept, cry and wake up, they were there. And when he came back, some cannot even greet. They were just looking at him. And he rushed. And then once the paw do everything, of course, he keep plenty animals. And then cut them, the intestines and some of those things. And ladies and gentlemen, He put it and then put salt, put everything, and then when this thing boil, of course, you can imagine those like, and nothing again, no yam, nothing. It just those meat. He'll eat it like food, maybe until they get back to the house. Said, so one of his son, maybe almost to the last son. So the hunger, it was desperate and pack some of the intestine. As he packed this intestine, slot it so much in his mouth without chewing it, and all this intestine packed and now blocked the esophagus. And then they were struggling. The eye of this son popped out. No breathing, was struggling. They were struggling, battling back, up and down. Struggle. It took them till night. In fact, according to him, they couldn't live. No, it's not this time of banditry and all of those things. It was still our forest, not the Fulani herdsmen. And he nearly lost the son. God just helped. Of course, I've always told us that my grandfather, happens to be a man who worships Sango. So he's a traditionalist. That's the man that brought me up with iron hand. He's the one that tells me anywhere truth cannot be said, leave that place. So that's why when people come to use religion to deceive me, I say you are just wasting your time. When you are good, you are good. When you are not good, you are not good. So not even religion. This man, we said we struggle, boo, 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 and then was able to rescue the child. When he came back, that's when he sang the song. And then say from there, he came back. He planned himself, has his farm, and all of that. So when children come, they see food to eat. So sometimes he can go for hunting, can take him 3 days before he will return back to the hut. So he has no fear. So you can see what I'm trying to portray here. And so my grandfather, when he goes for hunting, sometime when we are together, and the tactics, sorry if you don't see gun with me. So it's supposed to be a hunter, okay? So you can see the firing and targeting the subject. So my grandfather, so I'm this type that close to old people, He will wait, I will see, he will target. After targeting, he will target, he will be looking. So when he will now see the animals, you will see that he will recock the gun back and use the bomb, the base of the gun and hit ground. Boom. I say, let's go. I said, that what happened. I said, that's not the animal. When we live there, we see the animal, some of maybe those other kind of squirrel, and they will move and pass us. Some will say, yes. Yeah. Then my grandfather will say, nonsense. I was like, this man didn't kill this thing. Now look at another lesson. So I'm trying to tell us so that you calm down and be in charge. Look at these guys. You won't like this result they did, but it interests me. Why? Not that so they're supposed not to have a losing month, but they do not have. So you can't call this luck. If somebody who have traded last year, 2024, November to November 2025, no month was lost. But the target, the result were not the same though. We have some high, some low, and all of that. But no single month was lost, ladies and gentlemen. And if they didn't end this month so big, I'm not going to be surprised. Remember, I've already telling us that beginning of the year, like January, February, trade are not much because there are no much liquidity. But from April, market pickup, May, June, July to August. You see, April to August are usually good. Oh my word. Okay? So they are usually good for trading. Then September, sometime by luck, the October can be good. But the moment you enter November, December, they are struggling months. Why? There are no more liquidity in the market. People have gone on holiday, company have shut down, then it's so scanty. So people, if you are not careful, what you are seeing in the market will be gapping and all of that. You will struggle with it and eventually lose money because you'll be overzealous. So all this I'm telling us now, they are very, very important. Okay? So they are very, very, very important that we need to pay attention on. Okay? So don't get it twisted. So coming back to where we were is that if trading is like that, then I must really, really understand what I'm doing part time. I must really understand what I'm doing part time, targeting, setting up strategy, and all sorts. So now, very quickly, and watch me on this chart. Thank God everybody have traded and make some money. Then you are looking for the next money to make. So man, money, market, money, man. Desperation or being too desperate can ruin your trading career. In fact, your investment career. So nothing happens that will not become history. But what I always tell people is that be careful not to be narrated as part of the history. Somebody who is narrated as part of the history, that means the person, they said this occasion was what led to his demise. No, don't do that. So now let's go back. You can see the market. Actually, I have different places I was saying that the market could react from and sell down yesterday. And that happened. If you look at it, this is 4-hour time frame. And what can you see here? We're looking at other blocks here. And I told us something very, very important, which was this. These are area of interest. So we're going to now look at the market again this morning. So these are area of interest. What happened? This is fair value gap. The market walk into this fair value gap. And then if I take my gun box, for instance, to measure probably 50%, so it tap in exactly to the 50%, because once a fair value gap is broad, you want to look at maybe to the discount and premium of that region. But that's not the issue. Now let's go. I'm going to remove all of these things again. You see the way I mapped the market yesterday, and it actually played out. Even the buy you people bought probably this morning or even yesterday, because there was a buy we bought yesterday, true, which were here. And I keep explaining that a point of interest or an origin is an origin, but does not mean that it's going to play out. Oh God, look at it. Yesterday, when the markets start crashing down from here yesterday, chances are there that you were in long. If you were in long without stop loss, this kind of move will have dragged you, will not know what to do. And I'm warning many of us, if you are scalping, let it be known that you are scalping, and then immediately it's hitting your take profit, you are taking it. Bah, bah, bah. In fact, with our psychological key level, you don't even need story. Because immediately you enter, you have known where you are exiting from. Why? You are either exiting at the major or minor. That's major psychological level or the minor. And I've told us that each, either minor or major, they are forming both support and resistance. So when you enter a market for sale, you are already targeted. You saw when you started market yesterday, you saw when I entered a market, and without wasting time, you enter my profit, and I told you that this thing now have entered my profit, and it passed my profit level and going. It's not my business. I've collected my own. That's what matters. And then what did I do? I didn't struggle. I didn't chase it. When it was now turning down, I enter. After I enter, I struggled there as if it was not going to go my way. Didn't bother. Because why? I put my stop loss, I put my take profit. And all of a sudden, after a long while, he struggled, and sold down. And that was when Mr. Nat was talking about 15 minutes. And it was in 15 minutes, he was struggling. And then the next thing, the market came down. If it didn't come down, the worst it would do to me is to hit my stop loss. But to be vulnerable without doing proper check, or without doing, even if you have done the proper check, when you finally enter, you didn't put the guard, you didn't guard it. It's like holding a fragile Samsung S24 Ultra or Note without screen guard, without all of this, and you now drop it and say you want to test how reliable that Samsung is, and you drop it from your, even from one story building is too much, even from your chair to the floor of your house. I say just do, then the screen don't go. Yeah, so you do no struggle. As the screen go, just bring us 720,000 naira to fix it. Yeah, simple. That big say you don't show me that one. Just give us 720 to buy another screen. So that's exactly what we do to our equity when we don't do appropriate thing. You saw the way the market, because this, like what I'm doing is like a journaling. The market yesterday, where we got entry from yesterday, that was on the 19th. Today is 20. This was the entry yesterday. After the whole thing, we found an entry here. And then we're enjoying our ride. And normally, why I intentionally don't have to go to that our psychological level so that you don't get carried away. The basics you must still understand, you must still work with your market structure. This is normally what the psychological level and that our instrument had done for us now. It helps us to buy and selling. But yes, we are still careful. We still understand when the market has changed its narrative. And so normally we still say, hey, this is the low. And then ordinarily without our tool, you might have not buy here, except you are very, very observant to have seen how the power of 3 play out here. Even this one become like a pin bar, even as a doji. Then you are entering here and take profit. I told us probably I will be targeting here, but there's a high here. So ordinarily from here, this is journaling now, from here to here, it's already like 180 pips. So if somebody who was entering from here, and then the stop loss here. So 1:2 is already done here. So 1:2 is already done here. That means you are done with the profit even before, because this is the external high that will need to be broken. So that means you're already done there, and you are in your profit of 160 something pips, accepting to lose 78 pips. So with that brought the idea of how much is actually your exposure. Your exposure may be, let's say, $125, depending on how much you trade with. So your exposure is $125, and probably maybe you enter 2 positions or 3 positions. One for 50, one for 50, one for 25. And then one for 50, as it close 1:2, you have done $100. Maybe you are now trailing the remaining one. Eventually, the remaining one you are trailing move up, probably to do how many pips? That one again, you move up, instead of $100, you do 150. So you end up seeing that when you are targeting 250, you end up making, sometimes you may end up making 270, 320, or sometimes you end up making 200 because of maybe the last point, it hits the break even. Okay, so now, as much as possible, the market break structure. I haven't broken the structure. Look at it. This is the break of structure, because this is the previous high that was waiting. Now, all of this thing was doing is not structure. Now, it break the structure getting to this point. You mark For instance, every area of interest before the structure was broken are meant to be marked. So I marked this and probably again mark this. The market move up and didn't, sorry, let me just do something very quickly. So you saw the way the whole market travel. So these are area of interest. Now you see this market come and he never tap into it. He never tap into it. He continue moving up here, break a structure. You have this point. The market didn't come back to it. Even with your psychological level. So what is making you to even trade all this was your psychological level? Because by the time we go to the psychological level, you're going to see all this point that market never come back to, but you are still finding a trade because you have a tool that can confluence and give you a very powerful entry. Then you have this again. And this is a breakout structure. Then the market created this a high and they came down and broke a new structure. So breaking this structure was definitely a fake out. You're right, but you have this. So you have this as a low, however. But this will happen. You have this last point to say, okay, even if the market go up, let it come back to it. You broke it. Have you seen something? Now, every step I mark, and it give me an idea when the market get there. Why are you reacting here? Oh, I see so the market push. You see that? Push up. Now, you see that our tools give us sell here. But on a naked chart, you probably wouldn't see. But of course, when you understand the naked chart more, when our tool give you, you have more confidence to understand what's going on. By the time you go to 5 minutes, you're going to see this character has changed purely. But now here was an order block origin, right? So including this one too, all of them. So the market screw up. It's supposed to continue and return back here, mitigate, and now but this camera, what did he do? He whapped the nonsense. So when he whapped this nonsense, what did this one become? This one become a breaker block because it validated the whole thing so that you have it here. It's not a guarantee. So when you have it here, the market come here, you are waiting because this is like a speed limit. That's those bomb you're driving. And when you get to a speed limit, as you are a driver, when you get to a speed limit, you reduce your speed. You gently drive towards that, that direction, and you gently slow down. Now, if it's not working well with you, you can turn. But this guy was a reckless driver. Whack all the nonsense. So there's no confirmation. That's why I don't put limit order. Though limit order save a lot of people, but limit order traders too, they don't trade anyhow. But yes, you may say you don't have confidence. I love to understand what I do. So people put those limit order and then, so imagine this limit order. You pushed off the nonsense. You are now waiting here, another one that was not touched here. They push off the nonsense. That's another breaker block. You see how he pushed them off? We got no confirmation yet. Push them, come back. He forced to see people as if I'm going to go up back. That's not the issue. He's not going anywhere. Push down again, then until finally got to this guy. When he got to this guy, he push, he struggle, he return back to the zone. You could find a buy, but of course, by the time you stepped up to 5 minutes, find a buy. And then you remember this was a rejection block. That's a breaker block. So this breaker block it got there again and sold down here and turned this one. This is support because this one was mitigated, it came back as a support, and you find a trade up. This time around, he validated this one was supposed to hold any water again. He has finished his job. Then so that you can see front. Seeing front, this one have not been tested. And I always tell us, if you don't remember, multiple weeks, an area of interest is a sign of reversal. These are multiple ways. Up close candle, down close candle, reversal to buy, up close candle, reversal to sell. Look at it. Anytime, that is, I move, I stop, I move. So you can see power of three already play out here, right? And then you have sold here. You see this can take your breath. Oh God. Because this candle that formed doji and all this week you are seeing can take your breath. I can guarantee you can take your breath. Because as you enter here, imagine, because for me, I haven't seen this. I've told us that what give me confidence in buying or selling at a particular point. I'm seeing power of three on this candle, and you enter from there. And I can tell you that if you check your two must have told you sell too. Now, and if you go to the psychological level, it may be psychological level you're having here, and then you have sold and put your stop loss above it. Some conservative trader don't have that energy to do that. Put it above. Normally, that's how it's supposed to be protected. Put it above the other block, and then target 1:2 risk reward. So that means, because this is support already, so they put it that way, and then that means there. So, but for me, Felix, I love to have my stop loss more reduced. So targeting here already will have been 1:3, losing 92 pips to make 280 pips thereabout. So that's, so you now see the market struggle there. This is 15-minute candle, for God's sake. So you have entered here, another 15-minute, the market jump up 1, 30-minute, 45-minute, 1 hour. It took 1 hour after. If you're not careful, you may waste this trade. Because the market is not going my way. You close it. And as soon as you close it, maybe at 45 minutes, you see, it will have hit my stop loss. Why do you put the stop loss before? Is it not to protect your account? And then the market ran. See, I don't know what's happening to me. The moment I close a trade, it don't go that direction. What's going on with me? Yes, you really need to sit down to ask yourself questions, refresh your brain. And that's why I've told us, if you're following my trade, weekend is not for trade. Because maybe for now, I will have to ban some of us not to trade synthetics for this period, so that you can build yourself very well. And then once you're able to build yourself very well and you build your base, making money on your Forex, now to now make money on your crypto future and you make money on your synthetic will be very simple. If anyone will agree with me, for this period, you suspend anything that has to do with synthetics, even your futures, except otherwise, maybe if I drop signals and all of that. But I will have said, perfect your strategy. I don't know, either I have a witness. How many of us are still trading? I'm not saying it's wrong, but in this process of learning, you need to perfect your strategy. How many of us are still trading, trying to trade your synthetic, trying to trade your future? How many of us are still engaging that way? Do we have anybody?
So me,
I think the people usually that day.
You do what?
I usually trade on weekends, Saturdays or Sundays.
Okay. Okay. So because what I'm saying that is that if you have the energy anyway, it's good. But if you know that, because your first major assignment in weekend before you go into any of your trade is that journal and review all your weekly activities you have done from Monday till Thursday, or from Monday till entering Friday morning, right? It should be your focus first. Then you can now, at your leisure time, so you can now go in, because it's going to help us to be able to refine and refresh back up as much as possible. Are we together? So now, so you can see how this market play out. So this is like a replay I come back to here. Then at the end of the day, this market came down, then almost, see this one now. See this, Oga. has not been tested. This chairman has not been tested. This is 15-minute order block. It has not been tested. This only took out this liquidity. Okay, just like creating a double bottom. So this guy, if care's not taken, market is coming back to this place.
My boss.
Yes, sir.
Well, I'm not seeing your cursor where you are touching, sir.
Look at it, where the market is now. And then look at this. And maybe your network is bad. Can we see my cursor? Hello, can we see my cursor?
Okay.
So where the market is now, there is another block below it, 15-minute order block, that was created before this market traveled up this way. It has not been mitigated. And another thing you should see is that when market has moved and moved and moved and moved and moved over a period of time. See, let me show you something. Let me show you everybody something here. You see, this is what you call trend line, right? This is what you call trend line. Okay, so you can mute yourself, everybody. Mute yourself so that now, so this is what you call trend line. So when you say this is a trend line, please you can mute yourself, everybody. I don't want this thing to be stopped. Now, this is what you call trend line. So this is what you call trend line.
Well, you're not streaming anything, sir.
Could it be your network or something?
Okay. Yes. Is it a comeback? Is it a re-enter?
It could be your network.
Okay.
Maybe a network.
Okay,
Is it a re-enter?
so now, if you look at it, this is a trend line. And with this trend line, we have said there are liquidities here. Let me take this. Even down to this point, all of these places are liquidity area. Now, when a market moves, please mute your mic, everybody. So when the market moves in that dimension, these are liquidity area. So why? People set order, buy order, sell order, stop losses. So when market has moved, you see that there's a, look at this, what happened, sweeping all of this to now push up again. So the way it has pushed up so much, maybe there's still more liquidity below that has not finished, like this now, which is another block. So the market could do again, and come there and stop, or come back here. You know, here has been mitigated. And a mitigated order block being revisited the second time is a support zone, or you can call it a demand zone, right? So it become more stronger and market can bounce from there. So that's why I will tell us that trading is about two sides of the coin. So you can't trade without understanding all of those factors. And so you can see FELIX past strategy with trade. So price action. And so if price action is the first fundamental things in our market, price action, liquidity, and then maybe partly SMC. So we don't trade SMC, we trade a hybrid. So these are the major three content of our trading. Then before other factors are put in together. So price action has to do with three major aspects we pick on price action, which I've been teaching this for a very long time. So first, the candle. So if you look at our trade, you know that we trade candlestick a lot. We don't trade chart pattern to an extent. You hear me, I don't talk so much about chart pattern, but they are okay. But I don't too much look at it. Like all those head and shoulder, they play out. There's no doubt about it. Double top, double bottom. Our double top, triple tops, we trade it with sweep of liquidity. So others trade it as a major returning point, but we trade it as a liquidity. Because when we have triple top or we have double top, we expect a kind of displacement. The market come back and sweep the double top or double bottom and still sell. While others sell, having seen the first and there's a point sometimes we trade it as resistance, support and resistance. So that means we still trade a bit of support and resistance. Our demand zone, demand and supply. Our demand and supply zones, they work more with when we have been mitigated at under block and all of that. Also massive move away. Yeah. So our support and resistance is more of overlap. We trade it more as an overlap. So which I'm going to show to you. We trade it as more as an overlap, so our support and resistance. So we trade candlesticks so much. Yeah, we trade candlesticks so much. And now, so this our liquidity. So we trade internal and external. Internal and external. Internal and external liquidity. Then SMC, that's where you see we refine market down. In SMC, we refine market down so much with MSS, order block. You see that we trade order block very well. So we trade order block, breaker block. So I've not taught too much time rejection block, right? So we trade SMC. In SMC, we trade more of MSS, order block, and imbalance. That is FEG. But most of you don't even look at it because when you have a powerful order block, FEG is one of the instruments that validates an A+ order block. Okay, so now, just a moment. So now let's go quickly. I'm going to wrap up shortly. So I'm removing all of this drawing, and then we are left with a plain chart. You know, our normal, because this money, you have made money already. That's good. And now, normally, I've told you that a lot of people are not trading this market all this while. You should know. A lot don't know what's going on. Right. So then we have this. Yesterday, I was telling us that the market will go up. Reason being that, so you can see that power of three actually played out. This was the previous day accumulation, manipulation, and distribution. But there's still a force, so much strong force selling down. You can see the massive sell down. Now, many wouldn't know why. And I told you that even on daily time frame, this tend to be like a rejection, but there's a massive one here on daily time frame. So if I just look at it at a glance, see what I can see here, there's a fair value gap. So it's a point of interest. It's a point of interest. So there's a fair value gap. And now, so we marked, so and I say, when I come to the market straight away, what do? I come here and look at the previous day high and low as my first pivot point. This was yesterday high. So there's a story there. And what is our story there? Remember, we trade price action, FELIX PnLStrategy, advanced path strategy, including price action, liquidity, and SMC or ICT. Right? So this is a previous day high, a previous day low. So ordinarily, this is just a massive kind of, you can see this kind of manipulations. If you don't know, you don't have some right tool, you probably will not be able to trade this trade. But ordinarily, we can't define where exactly. Sometimes when I open to be able to see that there are other tools we use to detect where the market opened from and where did it first go. Because this previous day candle, irrespective of what it did, was bullish. But after selling up here, buying up, so it was bullish, right? So this one open. If it was here it first came, that means this market should be bullish today too. So continue buying up. But you can see now this is a doji. It's a non-decisive kind of a thing, but it has swept this low and it has not swept this high. So psychologically, with the external liquidity, because high of the previous day and low, they are external liquidity. Now, but to this structure, it's an internal liquidity because on this daily structure, with the swing high, swing low, it's an internal liquidity because we have some here and we have some here. So here and here, this swing high and this swing low is an external liquidity to this daily move. All right, so let me not complicate issues for us. Now, I've got, first thing I do is to get a pivot point that will be relevant for me for the period. So that means I'm going to get this, which will turn to be like my dealing range or my trading zone. So let's call it trading zone. Because if I call it dealing range, it's another theory that I use to identify market buyers. If I want to know where is the market supposed to go to, you can see that those are the things I use for Bitcoin, and then telling that we're going to go to $74,000 while we're still at 120 something thousand dollars. So it doesn't look like, it looks strange. Is this guy a witch? It's not a witch. It's about market wizardry to understand what's going on in the market. So this is our pivot point for me. They are very important. Now, so if I can still find another one, maybe here, they are very important too, because they can form decision for you. So let's take it. Now, this on daily time frame. You don't waste too much time on daily time frame. So what you now want to check now is that I haven't checked all the pivot point. First, what I did now was to, number one, pivot point. So number two, and I need to see the immediate structure. So the immediate structure is this. This is a break of structure. That means it was going down. But we have a major break of structure here and market move up. So that means we have a break of structure down here. Now we already spotted it and marked it. So I'm going to go straight away to 4 hours. This is the top-down analysis. Remember what I told us, that the market was sore. So on 4 hours, I didn't bother to show you all of those other blocks on that daily time frame and then all of that. So let's not bother ourselves so much about it. So we're working with the current trend of activities right now. Now, so give and take, we had, so just to identify, this is what we call top-down analysis. This is a break of structure that move up, and then which we saw and we marked it yesterday. So you must be ready to be a student of history, but this is data, you are a historian data, whatever, data historian. So this market structure shift on 4 hours, a break of structure, this is a high, then it took out this high, but if you look at it, there's something inside here. Why did this happen here? Now, if I return back to this point, I can see a fair value gap. In fact, this fair value gap was so extended to have up to this. You understand? Because all this can do all through a fair value gap. Now what happened is too broad. I'm going to be dealing with PDRA. So look at the PDRA, meaning I'm working with when the market spot up to the premium. So from 50% up premium, from 50% down discount. And if I'm selling, I want to sell from expensive to cheap. I will make more money. If I'm buying, I want to buy from cheap to expensive. All right. So when you buy, because when you buy here, you have more money, and you sell here, you have more volume. So if I'm buying, you are buying at a discount. If you are selling from premium. So that's what you have just seen here. That means on this fair value gap was what this market reacted to. It's very simple. the market reacted to this fair value gap. From here to this point, and we got this. We got this. And now, so it's very simple. So if you discard the higher time frame, you joke with yourself. So this is a market structure shift on 4 hours. Now, where is the origin? So the origin was here. So pay attention. Always follow this, my teaching. It's very simple. I try to simplify this thing as much as possible. Now, so the market break, this is a market structure shift. You see all this market, people will trade it wrongly and they will pay for it. Now, a man who was patient enough to see break of structure, there's a low that brought about that break, which is the origin of that break. So ordinarily, if the market should travel to continue to buy, it's supposed to come back here as like another block to mitigate. The market broke it. That is market structure shift. Okay? That is MSS or change of character. The market return back to the origin and tap into it fire for fire. So if I go back to a lower time frame, I'll be able to refine it. For somebody who was trading on 4 hours, he may not enter on time, or some of them, like I told us, that some of them, what they do is that they set limit order. Once they see a shift, then they now go like this to the mouth of it, then their stop loss is above the other block. Come on, that's 400 and something pips. I don't trade like that because this is good, but they know what they are doing. So that's one of the things. Do you know what you are doing? That's the one important thing. And 1:2 risk reward already. Don't even need to go to down. So 1:2 risk reward already is done here. So this man is giving 440 pips or 442 pips to make 931 pips. Oh yeah, you heard me that. So that's one of the things you need to understand, that this person know what he's doing. So, but some of us will like refinement. So the market has come back. Now, so the market now came down again. So this is now break of structure. After a shift, you have structural break. After a break to a side, look at it. So this is what happened. Sometimes we call this strategy. So there are so many things, flip or Quasimodo. Now, this is a high and a low was created. This low pushed the market up to make this place got broken. So that is a break of structure. Now, there was a high that led to this structural break. So when market crosses it down and the same reversal to the up is called shift in market structure. Why? This is a break of structure. The market is supposed to continue like this. After breaking this, push back and break this one. So you were expecting that the market should come back to break this one. It refused. What it did, on rare occasions, does market actually come to break the external low that bring about the high. Sometimes the market do otherwise. So don't narrow your brain to one side where the market just, so market can create internal structure, right? By creating a low here without reaching here. After creating a low here, you will now create a high that is lower, right? That means the market is actually trying to step down as much. Then you now take that one. That's a change of character, which you're supposed to have here. And then move down. Before getting here, you're already in the market. But in this case, it did a proper one. Notice a higher time frame. So what you are seeing here is this chart. This drawing you are seeing here is this chart I just draw for you now. So what happened? Since there was a break of structure, market structure shift. Wow. So anything here That means you are now checking other block here, fair value gap. The market now came back and respect itself at the fair value gap or the order block as it tap into it. So some place their trade and put their stop loss above that fair value gap. Now, remember, there was another low. Okay, this low was the one inside. This one was the next structure that was broken. So this is a break of structure, which invariably means that the market now is a downtrend. It's now a downtrend. So the market now is a downtrend, and that was what you see play here. Market structure shift, break of structure. Okay, so having broke this structure makes sense. I remember what plays out here is a similar thing that was playing out here now, internally. I'm pitting gold. I don't know what may happen to gold anytime soon. So what played out here was a fair value gap. Now see the same thing that happened here. You see this structure here is almost the same here. Now we have this break of structure. And this break of structure, first of all, let's take this guy that was mitigated. So first of all, let's go, ladies and gentlemen. It's very, very important. Now we go this way. We have, this is an order block now, number one. So this order block is yet to be mitigated. So the gold have problem ahead. But this problem ahead is a drag that is, liquidity being attracted to that point. Now, this is a break. This is another block. Now, this other block has a very massive fair value gap here. So market came down and broke this structure. This is another break of structure on 4 hours. Massive, no problem. The market broke this structure. So that means you have anything before the structure was breaking, they are your point of interest here and including here. So if you pick it all away from here, so we have all of this. So the market actually crosses it without stress and went straight to the fair value gap, which was here. So now, what do we have? We have moved. This is a break of structure. We have mitigated the fair value gap and we sell down. Okay, no problem. So this low is still standing by, which is still now with this our point, pivot point. So this low is still standing by. So we are still in order. We are in between. So we now need to cross above this point, or we break this and continue to sell. So now let's go to 1 hour. Now we go to 1 hour, yours truly. So let me take out this, or I can just leave it to help. But remember, you see this one is still standing. So if you come to 1 hour, so let me take up this so that it will not be too dirty. Come to 1 hour, something happened here. We have another break of structure in 1 hour, which is here. So this guy is still our low. So this is a break of structure. Then we have this point here. All right. So break of structure. Then we have this point and market structure shift. So shifted, of course, double into it. So this was another block that was mitigated. And I told us this was mitigated. This came back to it and turned it to a support. So here now we have a support. Here we have another support. We'll call it a demand zone or a set side liquidity. So we're still standing. Okay, makes sense. We have another break of structure here. Then we had this. we had this. So this was not mitigated. This was mitigated. So we have another break of structure. So let me not waste too much time. We have the last one here. So where are we now? So by the time we get to lower time frame, so we return back here to hit this order block. You see that? But this was market move here. It's a break of structure. This is a change of character. And this is another block. Market return back to it. Makes sense. Now we'll go to 30-minute quickly so that we can adjust back to our 15-minute and know where we are. Now looking at our 15-minute, all plays out to this structure. And then, 30 minutes, sorry. Just want to go to 15 minutes so that we can save ourselves the energy. Make a lot of sense. So we had gotten this, a change of character, the market move. Then the market crosses this, break this structure again. These are internal structure. We have this external structure. It's already broken. Then we have this again, market structure shift. So we travel to this fair value gap and get swept off. So now we have the market broke this structure here. So fantastic, making sense. So are we going to return back up? That's a question. So we return back up or not? So we came down here. Now we are now battling with this high. Why? Because the markets move up here and we return back to this low. So invariably, we came back to this point of interest and got this one mitigated. So we'll tap into it. So we need to break this man as the next line of action. If not, if we return back here, we now reset entirely. So if we're playing and breaking out of this man, remember this guy, Chindi was yesterday high. So, and this was yesterday low. And we have taken out the yesterday low. We make our intention of going up. So you can say, okay, we should, taking the sell side liquidity, we should go to take the buy side liquidity. So invariably, we should be bullish. And that was why we're able to get a buy today, this morning, because of our tool. So finally, if I should go to 5 minutes, so going back to 5 minutes has created another kind of internal structure. By the way, this is a low, and then, right, this is a high, right? So, but this is not giving you promising stuff. So you have it so much smartly to this point. So you need to break this structure. So, but ordinarily, I will have entered here, though we entered before here because we are using additional tool. So, but structurally, once this place get broken, they make a lot of sense. So if we break this point, and I'm sure we get rejected here, so that means for anybody who was here will have bought here again too, because this like a tapping into this origin. Now, so when we break above this point, so you want to check something here. Maybe this, maybe the last, sorry. Maybe this may be the last point, origin, depending on what play out all of these points. So, but for this place to become an origin, we need to have the market break above this high. So this high is pending to be broken. And so if we break above this, that's a break of structure, probably tap into this. So you want another retracement, perhaps back here, or if it's this one, that's going to be another candle. And so you have to, so meaning that right now, some of us have traded and make money are supposed to maybe probably have entered here and waiting. Of course, those of us who are using psychological level haven't entered here, you're already in profit, 100 pips, you have taken it. While you are waiting for maybe another new order you pick, because your stop loss is below here, and you are waiting for the market to actually break above this. So, when I say somebody who have not entered, can he still enter here? For me, no, I won't enter. I will allow this market structure break, and the pullback of it should be my entry while targeting up here. So currently, that's the structure I can see. And that's how you refine your market as much as possible. So by the time we're now going into our tools, you'll be happy because, so going back to our tool, I told us that those of us who are using our tool, if you can know, I want to believe that this video is going to go to other places. So look at what play out. So you still have understanding of your structure because you understand the basics, how we trade. So let me take out all of this. Don't mind me. I've color everywhere, and they are for purpose. So see what I've just explained now. So here you come. And then what will aid you? You can see that the market is actually at the resistance point. So that means it has capacity to get rejected and come back here or even return back here. But if you don't have this psychological level, you probably wouldn't know. And then look at our own tool already told buy. And then I'm sure the buy when you bought here, because sometimes when they give you, this is, so sometimes when market create a long wick, I want to go to 5 minutes. If not 15 minutes, the most perfect, unrepainted signal of these our tools. You can see from this cell, massive. But now let me step down to 5 minutes. So it can now give you early entry. So you can see this 5 minutes. But even with this, your 5 minutes, this still play out as the main construction. So meaning that if this one still play out as the main construction, this your stop loss will be too bogus. Now I'm going down to 3 minutes sometime, but sometime when it just give to you, you pick it. So going down to 3 minutes may further reduce this. Can you see now? Because this is a psychological level, which is now forming like a support for you, or it should form a resistance. Now, why make me travel to a lower time frame when the medium time frame that I'm working on is giving so much gap of my entry? So if I go to, you can't go to 2 minutes if you are not using premium account. So understand that. So if I go to 2 minutes, I'm going to have a reduce. So you can only play with your 15 minutes, your 5 minutes, your 3 minutes, and your 1 minute. So if I go to my 1 minute, that will further reduce for me. Number one, why do I go to 1 minute? This market has traveled down so much, number one. And so number two is at a point that make more sense. So now, so this, because the moment this one painted, remember, that will have formed my entry. So you know why you are twisting your timing, because this is the candle that your market pointed. So that means your stop loss below the wick. And now what makes sense about this wick is that it's equally below a pivot point. That's a psychological level. So which can form a good support if the market return back to it. So 1:2 risk reward. Now you can see now that even without we talking about 1:2 risk reward, here, when the market gets here, so like say you want to enter position, that not come to your planning, and I'm going to enter 3 positions or 4, for instance. So now that comes to tell us this. So it's very important. You can see trading is mechanical, and then you have to follow suit. I've told us time without number. So let's say a man who have an account of $500 with capital extent, that's his own main money. He want to trade with 5%. Now, so let's go back to this gold we just did now. Now, so if we look at this stop loss, it's 136 pips. Let's make it to be 140 pips. So I'm going to type 140 pips here. So let's want to know how much. So we are spending, okay? We are spending how much? we are spending $25 if that's what you want to risk. $25. If it's 10% of your money, but understand your rule, and that's what matters. Some are moderately aggressive, using 10% of your $500. That you want to expose $50. Now check, because of your entry, what you are using is, so your lot size is this, is 0.0357. So let's call it 0.03. Or yes, so 0.0357. That's your lot size. So let's call it 0.03. So if it's 0.03, so coming here to enter this trade, ladies and gentlemen, you have 0.01 in 3 places to enter. So 0.031 in 3 places to enter. So if you hit stop loss on any of them, so now you have entered 3 positions. Now, the first position, you can see that now sometimes when you follow some traders' account, maybe the market was too massive that you can't get a proper refinement. Because you can, if you go to seconds, I can't give you seconds. I can go to seconds, but I can't give you seconds. And now, but we have a rule on our own. When you enter, you say target 50 pips to 100 pips and all of that. And from ordinarily, if the market was entered exactly this line to this line is 100 pips. So now, if you're targeting, so that means here was too close for you. But if you are scalping it, you can always make the money. So you are now targeting the center of the next pivot point, which is going to be 65. So that means at that point, it's actually not up to 1:1 ratio, something like that. Because that's, you are targeting like 100 and something pips. But you can take profit. But now, if you're working with normal 1:2 risk reward, this is going to be. So that means you will be targeting the next, so the next 100. So this is 100, 100, 100. This is 1, 2. This is 200. Now this one is not up to 100. That's going to give you, maybe this one is about 80 something pips because it didn't get here. So you can see if 1:2 risk reward is going to give you 280 pips or thereabout. And exactly the market actually got there and it did well. And after getting there, so still on that your 1 minute, you know you have done this. So your 1:2 risk reward, each have hit there, but in between, you are still making profits. You can see the market trail nicely to that point. And then where we got there, that rejection was at the center of it all at 85, which is the middle of this 100. So this one from here to that point is 50 pips. Now, at that 50 pips, so there was a rejection. Still under your 1 minute. I'm not saying you should stay on 1 minute, but because the market is actually not trending as massive as possible, this is already rejection. So that means at the close of this candle was your entry. But remember, you only do this buy and selling. And then this one, the control measure may be more powerful. So just 50 pips. So if it's 50 pips, that is your stop loss. That means even if you are targeting here, you're already almost times 3 because this is 1:2 risk, 2 point something. So if it's your 1:2 risk reward, just little below the center of this one, but you now say, okay, I'm taking it to be this place. Are you seeing it now? So you have taken your profit. Don't struggle. I haven't taken the profit. You come back again and wait strategically. Now you can see that the market actually traveled down to the center again here. This is the center. Oh God. This market is very fantastic. Now, probably you are waiting because you didn't have your confirmation. All right. And if you say, okay, this is your confirmation, remember we have rules for our confirmation. Now, probably I didn't have my confirmation, but you can see the market already told me this one. So you probably want to enter here, but Felix, I wouldn't enter. You know why? I'm close to resistance. Now the market drift down. It actually gives us our own pattern. I know many of us who are, are external students understand this pattern. So that means this guy had given you confidence. So that there's some trade you can lose. So you understand. There's some trade because it's not meeting up with your confidence. So, but look at this here. But what does not really paint much I have seen in these tool is actually 15 minutes. So we can return back here. And your stop loss, you can see how I refine. So below, not even this my own, but this previous one. So that is like 33.7 pips. So 1:2 risk reward will be somewhere here. Okay, so 1:2 risk reward will almost go into the center of this guy. Now you can see the market travel. This is the center, that is 5. Many of you don't know what this 5 we're talking about. Those of you who are students, you know what we're talking about. Now, so the market drift down. And now, here we are, right? So this is another point that is telling us sell. But you know why we came down to this 1 minute was because of this long. So you don't stay there too much. If not, you can have a, what do we call it? A fake entry, right? Because the market can deceive you. So you can imagine now when we come back to that, our 3 minutes, he has not said any sell. So these are just major pullback. So staying there sometime you'll be doing, and then market is not actually respecting that, but you know it's just within a shorter period of time. Why I came down to that 1 minute was to reduce my length of stop loss. So you can see that the market continue, right? You just for it to break above this point again and continue. If it does not, then that means you could find that sell down. Remember, we're talking about this order block and all of that. So, ladies and gentlemen, this is what we should always practice. Learn, practice, learn, practice, learn, practice. Very, very important so that we can be in charge of our market. All right.